Welcome to Friday Takeaway. Let's not waste any time. Big news this week, not the Fed leaving rates unchanged, that was largely expected. Instead, the market read more into the commentary, which hinted that its timetable to raise rates remains, albeit in the second half of 2017. In big US corporate news, Apple, the world's most valuable company, reported Q2 earnings which beat profit expectations but missed on revenue, iPhone sales and average selling prices. It also missed on China sales with revenue down for the fifth straight quarter in a row. Facebook also reported earnings, Q1 for them, EPS and revenue beat forecasts, but despite having nearly 2 billion active users monthly and 1.3 billion users daily, it warned of slowing sales in the coming quarters, not helped by lower average user revenues and increasing costs. At home, Malaysia is proposing an employee insurance scheme where employees and employers contribute 0.25% of the salary amount to help cover expenses in cases of retrenchment. But while conceptually popular, critics dislike the government's tiny role in the scheme and the disproportionate amount of monies collected versus the amount to be paid out. At home, the ringgit's 2.5% 1 month advance has been halted, with the Fed steering a steady path to a June rate increase and US non-manufacturing data rebounding in April, which has given the dollar some support. A quick look now at the CI. As at 10 AM, the index was rebounding 0.1% to 1,760 points, 0.4% lower than last Friday's closing. Year to date though, the CI is up 7%. Next up, some big weekly movers. Iskandar Waterfront City, or IWC, is big in the news this week. They're a property developer controlled by the Johor-based businessman Tan Sri Lim Kang Hu. Right now, their shares are suspended, but yesterday in pre-trade they were limited down at 216 after having seen their stock triple in 2017 alone on Bandar Malaysia euphoria. To recall, IWC have proposed a merger with their parent, Iskandar Waterfront Holdings, whose crown jewel is a 60% JV share in Bandar Malaysia. Meanwhile, Tan Sri Lim's other vehicle, EcoVest, is still trading, and while it dropped as much as 29% yesterday on this news, today it is rebounding to RM1.24, following comments from their MD, Datuk Sri Lim Keng Cheng, that its fundamentals remain intact and the sell-down was a temporary phenomenon. On Wednesday, Bandar Malaysia owner TRX City announced that the sale of this 60% share to the IWH CIREC JV has been terminated after China's government declined to stump up the cash, according to a report by the Wall Street Journal. But conflicting reports abound, including one source telling The Edge that financing has in fact been obtained. Bandar Malaysia aside, IWC is developing Danga Bay, spread over 4,300 acres of prime waterfront land in JB, right next to wealthy Singapore. And if their merger with parent IWH goes through, the crown jewel will become the 60% JV stake it owns with China's CIREC in Bandar Malaysia. And that's a place which owns 197 hectares of prime land in KL and some 200 billion ringgit in gross development value. There are no local analysts covering the stock right now, which is near its record high of RM3.24, and that's some 4 times higher than its 52-week low of 78.5 cents. But given how EcoVest was battered, you can bet that it won't be a pretty picture when trading resumes. Felda Global Ventures Berhad, they're also in the news after The Edge reported that a restructuring could be on the cards. Now, as you know, FGV is the third largest palm oil company in the world, with over 850,000 hectares of land in Malaysia and Indonesia. Currently trading at RM1.87, FGV shares are down 12% in the past week. Now, The Edge Weekly have reported that A. Felda is seeking the return of the land that is currently leased out to and managed by FGV, and B. there could be new shareholders in the form of Wilmar co-founder Matua Sitoris and Rajawali Group Chief Tan Sri Peter Sondag to help steady the ship. And that's the thing, while upsetting in the short term, analysts say this could be a major re-rating for FGV depending on the terms of the deal. Now, they're still one of the biggest planters in the world, and if the reports are right, FGV could do a lot worse than have Wilmar's co-founder and Rajawali's boss on their board. Underperform is what most analysts are saying, with consensus target price currently at RM1.68, that's nearly 9% lower than the closing price yesterday.